Well, it's time for business now, and for that, Kate Moody joins me in the studio. Hi, Kate.
Hi, Olivia.
We're starting in Washington, where all eyes are on the US Federal Reserve.
Absolutely. As expected, America's central bank has announced a second interest rate cut in as many months in an effort to stimulate the economy and boost inflation towards its 2% target. Now, back in July, the Fed reduced its key federal funds rate for the first time in over a decade. That rate was slashed during the financial crisis. It remained low throughout the recovery, and as you can see there, has been brought up very gradually since the end of 2015. In a divided vote on Wednesday, the Board of Governors decided on a further reduction of 25 basis points, which takes the borrowing rate to between 1.75% and 2%. Fed Chief Jerome Powell said the economy was facing growing uncertainty.
Global growth has continued to weaken. I think it's weakened since our last meeting. Trade developments have been up and down and then up, I guess, or back up perhaps over the course of this intermeeting period. In any case, they've been quite volatile. So we do see those risks as actually more heightened now. We're going to be watching that carefully. We're also going to be watching the U.S. data quite carefully, and we'll have to make an assessment as we go.
Well, Donald Trump has been extremely vocal in calling for sharply lower interest rates. That's at odds with modern tradition in which U.S. presidents don't directly comment on the Fed's movements. The American president appears to believe that those cuts should have been even deeper. He has tweeted in the last hour or so that the decision shows no guts and no vision. Powell himself has repeatedly shrugged off such criticism in the past and demurred when asked whether he personally had supported this latest rate cut. Take a listen.
That the idea that if you see trouble approaching on the horizon, you steer away from it if you can, I think that's a good idea in principle. And I think history teaches us that it's better to be proactive in adjusting policy if you can.
Critics say that with moderate economic growth and low unemployment, the Fed shouldn't be taking action at all, but it should rather keep its tools to be used in a real crisis. The Fed, however, pointed to weakened business investment and exports, even as it slightly raised its prediction for economic growth from 2.2 to 2.1% for this coming year. The rate that a central bank sets then trickles down to other banks, so lower rates make mortgages, loans, or credit card payments less expensive, but they also mean smaller returns on savings. American consumers shouldn't expect an immediate impact, but that could change if this trend continues. Well, Wall Street had been waiting for that announcement. We've seen U.S. markets dropping still further below the flat line in the aftermath of that announcement. You can see the Nasdaq down nearly 0.7% with a little under an hour of trade to go. We'll be bringing you the closing figures in just about an hour's time. Investors still taking in what that announcement will really mean for them. Shares of FedEx, meanwhile, have plunged 14% after the shipping and logistics company slashed its own outlook. Earlier, we saw a muted close for the major European markets. The French energy company EDF saw its shares rise 3%. Oil prices are also stabilizing after huge movement on Monday. US WTI trading at about $58.03 per barrel there. International Brent at $63.43. Markets somewhat reassured by the Saudi announcement that its output was already coming back following the weekend's drone attacks. Well, uncertainty in the oil markets has revived concern about fuel costs. Here in France, a consumer association called on the government to drop one of its taxes on petrol in order to cushion the higher bill being passed on to drivers. Ellen Gainsford reports.
Keeping an eye on the price at the pump. A consumer association in France is petitioning the government. They want the double tax on energy removed. At the moment, fuel and central heating are taxed twice. The TICPE, or domestic consumption tax, is itself taxed for VAT.
This tax on a tax is very expensive for consumers, costing 4.6 billion euros last year. It doesn't help the energy transition. It negatively affects the purchasing power of French people, without helping the country transition its energy use.
For motorists, this means that the price of a litre of petrol is 30% base cost, linked to the price of global crude oil markets, 10% for service stations and refining, and 60% taxes. The UFC Consumer Association argues that if VAT is removed, petrol would be 12 to 14 cents cheaper a litre, while the CEO of Total is calling for a floating tax that would follow the price of a barrel of petrol. But the Minister of Public Action and Accounts, Gérald Darmanin, has come out against this idea and has justified the government's position.
Deciding to remove the carbon tax as we did is without doubt more effective than a floating domestic tax.
The carbon tax was removed by the government last year in response to the Yellow Vest movement, but it's now under debate again. A report by the Court of Auditors is calling for it to be reinstated.
Moving on to some of the day's other business headlines. Airbus has increased its forecast for the global demand for new planes over the next 20 years. The aircraft maker now expects that just over 39,000 planes will be needed to be built over 2 decades. That's up 2,000 from its last estimate. Airlines will be seeking to replace older planes with more fuel-efficient models. Pilots at British Airways have called off plans to hold another strike next week. Unions reported little progress in pay negotiations since last week's 2-week walkout, but said they didn't want to further damage the carrier's brand. 1,700 flights were cancelled last week. And researchers say that smart home devices are sending personal data to third parties like tech companies and advertisers. According to a study by Northeastern University and the Imperial College of London, smart TVs and streaming boxes have been collecting information and handing it over to companies like Netflix, Spotify, and Facebook, even if the owner of the device didn't even have an account with those sites. There is for now only limited oversight of the new wave of smart devices that are being developed for home use. Facebook, meanwhile, has announced more details of its new oversight board, dubbed the Supreme Court of the social network. The body will review appeals to policy decisions, including on removing content from Facebook's platforms. Laurent Berstecker has the details.
It's been called an important step towards accountability and transparency on social media. Facebook unveiled plans to set up an independent Supreme Court-style board that will oversee content moderation issues. The body will consist of 40 part-time members paid by an independent trust funded by Facebook, who will review decisions relating to content. Both Facebook and private users will be able to submit cases to the board, and its decisions will be binding, potentially overruling even Mark Zuckerberg. The Facebook founder, who first proposed the initiative last year, said it would help address content-related controversies.
As an independent organization, we hope it gives people confidence that their views will be heard and that Facebook doesn't have the ultimate power over their expression.
Facebook has repeatedly come under fire since it first announced it would start cracking down on fake news in the wake of the 2016 U.S. presidential election. Its moderators have been accused of disproportionately targeting right-wing content. In order to fend off claims of political bias, the group said the new board, which is expected to deliberate on its first cases by early 2020, will include members with views that could, quote, make people uncomfortable.
Optimistic there from Facebook, but still a lot of questions about what that board will actually be able to do.
Indeed, I get the impression if our appliances aren't spying on us, our social networks are judging us somehow. Thank you very much, Kate Moody.
Be careful.
For that business update.